So because it's a fake break of structure, what actually happens now is this then becomes a smart money trap. So we've now got a build up, smart money traders sitting here. So if we're bearish in regards to our bias and we want to take a sell, what happens here? So typically what happens is if you've got a fake break of structure in line with the way you want to trade, then you've got the build up underneath, for price to attack. The high or the low of the fake break of structure can then become the point of interest. So this could now become my entry. Let's see how this plays out. Liquidity isn't just a buzzword, okay? Liquidity is an actual build-up of orders. The word liquidity gets thrown around when it comes to trading a lot. And in this video today, I'm actually going to show you and show you a couple of examples of certain types of liquidity being induced, certain types of liquidity being engineered, created by the market, and then taken out for it to fuel a move. All right. So what we have here is GBP USD. I'm going to show 2 days of price action. So if you start off on a higher time frame, so we can just see where we're at. Okay. So this is the 1 hour time frame. What you can see here, for the sake of time and speed, I'm going to fly through the high time frame markup. But what we can see here is we've got, you've got this channel type build up, which is then induced to the high side. And before that happens, we've got a bearish, so you've got a bullish trend line build up as well, which is completely aggressively taken out by I assume some kind of news on that day, maybe not. And then what happens is, if you look to the left, in that aggressive move down, what actually happened was price took out this low. So when you get a low taken out like that, you do expect some kind of pullback, and this is exactly what happens here. Price takes out that low, retraces, takes out the low again, creates a 3 drive. So you find this happens often as well, like just like a 3 drive type vibe. And then price reversed from there and giving us a deep pullback. So at this time, I was looking at this and I actually believed that this was going to be a smart money trap and this would be taken out. At the time, that's what I believed. However, this wasn't the case. This was actually, the liquidity cycle play. And let me explain why. What actually happened is that you had the build up down here with this. This is the build up of the buy orders. And then we had liquidity, this high here and these highs here, but let's mark out that high. So you had the build up into the inducement and then the mitigation, okay? And then price then rejected from here. So what do we have here? So if we have a build up, an inducement, and then a mitigation, and then again, we had the inducement high respected. And what this actually did was, I won't get to this right now, but again, we had the same kind of thing on a lower time frame. Again, build up, equal lows, build up. All right, build up of orders into the inducement. Well, what did it induce? On the lower time frame, on the 1 minute, it's even clearer. It's a channel. Induces this, takes out the high, and then mitigates the actual high time frame inducement high and trades away. Okay, so at this point here, we have the similar thing again. Another liquidity cycle. Build up. Just a bullish channel. Little buy orders been built up. All right. Build up. People buying. Inducement. Mitigating, the high within here. It's not a clean mitigation, but, it's the same concept. And then again, price trades away. So when we're looking at this, if I'm looking at this and I'm seeing the high time frame, I'm not going to want to really be trying to buy in this market profile or looking at a market like this, because on the high time frame, we're looking like we've got a cycle that's about to distribute to the low side. And on the high time frame, look, we're bearish, aren't we? We've had our pullback. Price has come up, it's built up, it's induced and it's mitigated this supply zone. And then now, you know, smaller cycles are also playing in line with the high time frame cycle. So I'm looking at this now, and this is where it starts to get interesting. And this is where the lesson comes in. So I'm just going to play on for the sake of time. Cool. Perfect. So now we've had what you could class, you know, a low taken out from the previous day. So you could class this as a medium inducement. All right. So you could argue that potentially price could give us a pullback from here. And if we go on to the lower time frame, now we're going on to the M1, and it's going to get a lot more interesting. Right, let's see what happens. So now the low's been taken out, the medium inducement. Press play. Cool. What time is it? This is London open here. And then we get a nice aggressive response deeper into London. Okay. But what else do we have? Look at what we have here. Now we have an M1 cycle at play. We have channel, build up, bearish. So bringing in loads of sellers. Build up, inducement with the aggressive move down with the vector candles and you know, the speed, and then we have you can say, you know, the internal mitigation within the inducement low. However, there's no real mitigation on the left. There's nothing clean here. All right. So what's the deal here? Okay, let's have a look. Let's play on a bit more. So this is the first type of liquidity I wanted to cover, and it was the channel type liquidity. So this now should hold, and it does. But let's have a look to see what's really happening here. What's really happening is we're looking at going bearish. So we're looking at the high time frame cycle, build up, inducement, mitigation. Here, build up, inducement, mitigation, build up, inducement, mitigation. Right? So we want to trade with that, and we want to attack this trend, this liquidity down here. We've got all these buyers that are in this market that are yet to be taken out. Okay, buyers, and none of them have been taken out. They're all still in the market. So price, we believe that price wants to then now take out the rest of these buyers as part of the next cycle. So if we're looking at this now, and we're looking on the M1. What's price actually doing? So we've had the mini cycle on the M1, bearish build up, bringing in sellers, inducement, all right? And then we've had the internal mitigation, and then what we've had here is a mitigation down here. So tell me why this isn't a valid play. Why is this not a valid play? Why can't we take this after having build up, inducement, break of structure, right? And then a mitigation. Is that not valid? Mitigating the low? And maybe if we're buying, then we could target Asia high, for example, right? Why is that not valid? Let me explain why it's not valid. First of all, we have the high time frame cycle. We want to trade with the high time frame cycle. So what's happening here on the M1, what it's actually doing is giving us the build up, inducement, mitigation. That's that cycle complete. But what's happening now is creating another cycle in the sense that this is now all build up. Okay, it's a build up of liquidity. But what kind of build up is it? This kind of build up is actually, we had a build up, inducement, mitigation down here, but then price has retraced, taken out the channel high. But what that actually is a fake break of structure. Okay, so because it's a fake break of structure, what actually happens now is this then becomes a smart money trap. So we've now got a build up, smart money traders sitting here. Okay, so if we're bearish in regards to our bias and we want to take a sell, what happens here? So typically what happens is if you've got a fake break of structure in line with the way you want to trade, or the line with the bias, then you've got the build up underneath, for price to attack. The high or the low of the fake break of structure can then become the point of interest. So this could now become my entry. Okay. So let's see how this plays out. See if we can get the right timing as well. That will be good because this was London open between 8 and 9 a.m. UK time, that is. Okay, let's have a look at this as it's moving as well. So we've got this smart money trap here. So I've already told you what it is. It's a smart money trap in the sense that fake break of structure, it's mitigating, so it's giving us a response, giving us a reaction. Although this isn't nice. What is this? Build up. Why is it a build up? Look at the price. Look at it's a channel. It's not an aggressive move like this. Push, push, push. You know, 1, 2, 3. Aggressive moves is slow. Channel build up, bringing in loads of buyers, right? So let's see what happens. Hopefully, we also get timing. Cool. So you could just set a limit here if you wanted to. And perfect, because coming right into time. There we go. So what we also have here is the inducement. Sorry, I have to mark this out. Can't help myself. So what we also have here is the inducement high of the channel and then the inducement low of this channel. Okay. So this is the inducement high of the channel. And this is the inducement low. So this M1 channel here, this cycle, this channel, liquidity has been induced on both sides. And now what price is going to do? We're now in New York Open, which is perfection in regards to time. So within, between there's a few different time windows, but New York Open for the next 2 hours is great timing in regards to take a trade. So if I play on, there we go. What we do here was well, before this came up, what happened? Created relatively equal highs. Right? So at this point here, you don't even need to worry about all this stuff. You could just set the limit because it's the high. So of the inducement, it's the inducement high because this channel's been induced. All right? So the low has held. So you've got a build up here with the smart money trap. You got another build up which has been induced on both sides. You got the equal highs, and then price aggressively takes out the equal highs, moves into the POI and taps in. But what else happens? Let's say you didn't want to enter. So let's say you wasn't quite sure if this was a valid trade. What else happens? Okay, you get a nice move away now. But could you also say that this is equal highs? Look at the 2 wicks next to each other, and then this one's not too far ahead. Is that equal highs? I don't know. Cool. And price again moves higher, takes out the relatively equal highs. But we're still within this POI, right? We're still within the POI, just about. Let's look at the high. 308. Cool. So it's literally to the pipette. It's exactly the same. So if you was to do that, you need to add more for spread, obviously, which we know, right? So let's keep going though. Let's say you haven't taken the entry yet because you're not sure, you wasn't confident in this playing out, and you wanted another confirmation. So let's say you wanted a break of structure or like a relevant break of structure. Cool. Now we've got it. We've got the equal highs, the rejection, the aggressive move up, taking out the equal highs, and then we've got price breaking down and giving us the internal break or relative break of structure. So after that happens, what's next? Surely it means that you can then, sorry, let me delete that. If you wanted to maybe enter here, obviously, if you're going to do this, I would always recommend putting your stop loss still above the high. Tags in, all right? So equal highs created within the POI. Price rejects, comes up, equal highs are taken. And then we've had the relevant break of structure. And then we've had the mitigation as well, order flow mitigation as well. And this is now 2 p.m., even better timing. I won't go into the reasons why right now, but just note at 2 p.m. is a great time. And that aggressive move away is nothing short of beautiful. And now, price comes back up though. So, let's look at this now. If we were trying to manage this trade, where would we have gone break even? For me personally, my break even point would have to be down here. change this one another random color, like green. Why does this have to be the break-even point? Because I see that there's liquidity here. I would know that price could come down, take out that liquidity, to then want to take out an internal high, being one of these highs. But I would still trust that this high up here would be respected, because this is the main inducement high. Again, you can never be sure, but if we're following the rules and we're following the liquidity cycle, then that's what I would believe, right? But price does come back up, and if you have gone break even too soon, it takes you out. If not, if you're holding still, gives you a bit of a scare, comes back up. Then let's see what happens. Then price gives us another mitigation here. So price taking out liquidity to the left here, tapped into this fair value gap or imbalance, come back up, taking out these highs, right? And then moved away. And then giving us a mitigation after taking out this low as a, you could call that another internal break maybe. And then price gives us the real move, break even at this point. And where we're going to be targeting, obviously ideally you would target the lows or liquidity. However, it may not get there that same day. But if I just play on for the sake of time, you can see it almost gets there. Mark this out. This is the low. It stalls as the day goes on. Gets late in the day, doesn't quite get there, and now we're in Asia. All right. But what we're gonna do is go on to the 1 hour. Press play. There we go. You can see then price comes down, takes it out the low for a nice roughly 16-hour trade if you held it overnight, which I wouldn't do personally. Once I see price slowing down and stalling throughout that evening, I would take it out. So let's say you could call it on the conservative side a 10-hour trade, for example, or 11-hour trade. Still a solid trade, but the RR is kind of irrelevant in the sense that it's just about, I just wanted to explain the cycle itself in regards to the high time frame cycle, and then the lower time frame cycles within the high time frame cycle, and trading alongside that high time frame cycle, and also explaining the smart money trap, the fake breakup structure, the internal liquidity and cycle plays internally, etc, etc. Okay, so hopefully you guys enjoyed that and it made sense. If you want to watch more, don't forget to hit that video in the corner. God bless, take care, and we'll speak soon.